Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. The stock markets end flat after a range-bound session. CNBC-TV18 releases 20 stocks to watch out for in 2023, a list that includes companies from auto, oil and gas, telecom, banks, healthcare, fintech and more. Maruti Suzuki reports a robust operational performance in the third quarter on the back of lower input and employee costs. Margins come in above 9% for the second consecutive quarter. The company says pending customer orders stood at over 3.6 lakhs at the end of Q3. A third of them were for the newly launched models. With deals worth $1.3 billion awaiting approval, the Competition Commission seeks legal opinion to waive off a rule that mandates a minimum quorum of 3 members. Only 2 members are currently at the CCI, with one doubling up as the acting chairperson whose tenure has been extended till further orders. Just over a week to go for the union budget. Ballooning interest payments pose a serious fiscal challenge. A CNBC-TV18 analysis shows interest payments in FY23 have risen by nearly 40% to more than 9 lakh crore rupees. This amounts to 3.4% of the revised nominal GDP. The World Health Organization releases an urgent call to action to protect children from contaminated medicines on the back of cough syrup-related deaths in at least 7 countries. In the last few months, the UN agency advises countries and regulators to detect and remove substandard products from circulation, asks manufacturers to purchase from qualified and bona fide suppliers only. After chasing Google for years in the artificial intelligence race, Microsoft is hoping to leap forward, announces multi-billion-dollar investment into the company that developed ChatGPT. Microsoft could use the AI platform to mount a serious challenge to Google's search business. Well, let's start with the market action for the day. The sensex and the nifty recovering from their intraday lows, ending flat. Broader markets were under pressure today and underperformed the blue chips. The nifty mid-cap and the nifty bank ended 0.25% in the red. Across into the currency market, the rupee fell to 81.7 against the US dollar on the back of a rise in crude oil prices and forex outflows. However, a weak dollar against world currencies has restricted the rupee's losses. In fact, in the commodity market, crude oil prices continue to inch higher. Brent crude trading close to $80 10 days ago, and it's now closer to $90 a barrel. Strong demand outlook from China continues to keep prices higher. Many brokerages have predicted oil prices could hit $100 in the near term. Well, the top story this evening, and this is a CNBC-TV18 exclusive, M&A transactions worth $1.3 billion are in limbo due to the lack of quorum at the Competition Commission of India. The CCI currently has 2 members, and 1 member is doubling up as the acting chairperson. In fact, the government has just extended the tenure of Sangeeta Verma as the acting chairperson until further orders. However, the quorum needed at the CCI to clear deals is at least 3 members. Parikshit is standing by with more. Parikshit, what is the government's plan to try and fill the vacancies at the CCI?
Well, the industry, former CCI officials have raised several red flags about the fact that no M&A deals, no FDI proposal, no PE VC proposal or corporate insolvency resolution proposal has been cleared in the last 3 months. A.K. Gupta was the last permanent chairperson at the CCI. He retired in October. Since then, there has been no chairperson appointed by the government. There were only 2 members, one of whom is the acting chairperson. Therefore, because of the lack of quorum, which is 3 members, the CCI has been unable to function and clear several of these high-value M&A deals, which is amounting to about $1,300 million US dollars. And this is for at least 20 high-value deals. One of them is for $900 million, and this has already been approved in 8 jurisdictions. It's awaiting approval from the CCI. So this is what the CCI is looking to do. They have taken a view from the Attorney General. They are looking to write to the Ministry of Corporate Affairs, asking them to invoke the principle of doctrine of necessity, waive off the quorum requirement so that the existing members can clear all the pending proposals, because many of them are near expiry date or closing date as well. So let's wait and see how this happens, whether the quorum requirement can be waived off. At the same time, the MCA has also put out a circular opening applications for 3 member posts in the CCI. This application has to be sent to the Competition Commission of India within the next 45 days.
All right, Parikshit, many thanks for joining us now. And joining us to take this discussion forward is Avantika Kakkar, partner at Cyril Amarchand Mangaldas, and Samir R. Gandhi, co-founder of Axiom Law Chambers. Samir and Avantika, many thanks for joining us here on CNBC TV18. Avantika, let me start by asking you, because you've also red flagged this as a concern which is negatively impacting interests of all stakeholders involved since the month of October, which is when the permanent CCI chairperson retired. We haven't seen any clearances or approvals coming through. Are you disappointed today that we have now a status quo, so to speak, with the acting chairperson's tenure being extended until further orders? And even as Parikshit was pointing out, new members, the duration to fill in your application will take another 45 days. When those applications come in, how they'll be vetted, how long that process will take, we have no idea. What is the message that investors will take away from what has happened today?
The message definitely is, to be fair, what I've seen is that the Commission's working really hard in sort of resolving the pending cases before them. As far as they're concerned, it's business as usual. So anyone who's sort of appearing before the Commission sees that the logjam is what is holding up their approval, so to speak, and any action by the Commission. But yes, it's definitely not helpful. That one of the most important sort of regulators today, not only for merger regulation and combinations, but also the body that decides very high stakes for companies, whether it is in the nature of penalties or their very business models. That particular regulator today is incoherent and cannot act.
And that is a concern. And Samir, that's what I want to understand from you. We don't have clarity on when we are going to see those vacancies being filled up. The stalemate continues at this point in time. As Parikshit was reporting, the CCI has sought the Attorney General's opinion on what can be done to ensure that pendency is cleared, even without the necessary quorum. How worrying is this, Samir, at this point in time? And what do you believe is the way forward? Avantika has suggested, for instance, that there be an ordinance brought in, which we understand from the CCI sources is not something that the regulator would like the government to take forward. What do you believe is the way forward to end this logjam?
Thank you, Shireen, and thank you for having me on the show. I think it's critical that this issue get resolved and get resolved quickly. The CCI has worked hard to build its credibility in the course of the last 12 years of its operations. And this situation is in every which way unprecedented. However, it's unprecedented for the CCI doesn't necessarily mean that other regulators in India, other economic regulators have not been through a similar situation where they have lacked the quorum to make important decisions. Let's step back for a moment and understand that as far as the law is concerned, the reason why the quorum requirement exists in the first place is to ensure a fair hearing. Now, in exceptional circumstances and situations, the courts have stepped in and said, as a larger question of allowing parties a right to access justice, which is, of course, a constitutional right, there will be or can be a limited dispensation with the quorum requirement. And that is what has been referred to as being the doctrine of necessity. Courts have invoked this doctrine both in the context of the Securities and Exchange Board of India, SEBI, where its appellate tribunal did not have the requisite quorum. And they've done this in the context of our intellectual property appellate board. So while the CCI finds itself on uncharted territory, I feel that the resolution is in its grasp. I mean, it is for it to invoke the doctrine of necessity. I think to safeguard itself, certainly, opinions from the Attorney General, assurances from the Ministry of Corporate Affairs, that the decisions it takes as far as these critical merger control matters which are awaiting approval are things that the CCI could do. But I am a believer, at least, that the solution is within grasp. While the central government takes its time to make these appointments, and look, these are critical appointments. one can understand that the government is going into the budget session. There are plenty of things happening, but I feel like there is a solution at hand, and one that can be easily accessed through the doctrine of necessity. Shireen.
Right, Avantika, let's talk about the solutions. Thanks very much, Samir, for pointing that out. Avantika, as I pointed out, you have suggested that there be an ordinance that is invoked for a limited period. Samir is saying that it is within the scope of the CCI to invoke the doctrine of necessity to end this logjam. This is, of course, an exceptional time, and this has passed precedent with other regulators as well. Avantika, what do you believe the road ahead should look like?
Right. So let me clarify this. To the Ministry of Corporate Affairs, I suggested the ordinance because there is whatever action, whatever administrative action that the current bench at the Commission will take will need legal sanctity, right? The legal sanctity that I thought could come from the ordinance was that for 3 to 6 months, the Ministry has time to find the members and the chairperson, and for 3 to 6 months for a limited set of matters, that is non-contentious mergers, at least the quorum of 2 prevail. Quorum is the key to a fair hearing and due process requirements. Using an inchoate commission for matters that are contentious will lead to another logjam of litigation in courts, where one party or the other will say that I didn't get a fair hearing because the quorum was not as statutorily prescribed. The second suggestion I made was to the Commission itself, and I agree fully with Samir. The solution is at hand. The Commission in these non-contentious matters could seek a waiver from the parties to the quorum requirement, because it is a right for the parties. It is a right that the parties are guaranteed a fair hearing. And if the parties were to consent that, no, these 2 members as currently constitute the Competition Commission of India will constitute a fair and judicious forum for me, and I, as the party, give my consent to waive off the quorum requirement, then right then, the Commission will be in a position to approve or make further orders with respect to those combinations. Again, I want to caveat this. We're talking of non-contentious situations. It's unlikely in a contentious situation, for instance, where a third party has objected, say, to a merger, that the third party will consent to the quorum rights being waived away. It is unlikely. It's not impossible. Shireen, over to you.
Yes, with those caveats on the table, we will have to wait to see what is the road that the CCI takes forward, and of course the Ministry of Corporate Affairs. But both Samir and Avantika, before I let you go, as we reported, we are given to understand at this point in time that there could be more than half a dozen combination cases, some insolvency cases that are also pending approval given the lack of quorum. And many of these could be up against some time deadlines as well. Any information that you can share with us, Samir and Avantika, on what's at stake on account of this logjam? Samir, I'll start with you.
Thank you, Shireen. And look, there's a lot at stake. I think the first thing that is at stake is the Commission's credibility. The Commission has done a fantastic job on the merger control front in clearing, well within its timelines, global transactions, local domestic transactions, so on and so forth. And incidentally, Shireen, they've continued to clear what they call green channel transactions, the ones which simply have, very little bearing on competition, even, when quorum has been absent. So I think the first implication really is one of credibility globally and domestically. And the second is, I think, and this is shared anxiety with Avantika, because curiously we share this situation where there are, global transactions at hand which have received clearances in multiple different jurisdictions. And India is all that stands in the way of, finally closing this transaction. So there's a lot at stake. I mean, parties are very conscious of making due and timely filings to the CCI with the expectation that the CCI will clear it if there was no competition concern. And what we're seeing is that in several of these transactions, there are no competition concerns. And it's simply this procedural delay which is holding things up. So there is plenty riding on this.
Plenty riding on it. Avantika, I'll give you the final word. To Sameer's point, that could you perhaps broaden the scope of the green channel to try and process and get through with transactions which are held up merely on account of procedure?
That too will require a decision by the inchoate commission. It cannot, again, happen without the 3 members present and approving the changes to the combination regulation. So at some point, we're going to keep coming up against this. As far as the green channels is concerned, it's meant to be a deemed approval. So the moment I go in, I get the acknowledgement, and that acknowledgement is meant to be my approval. So it's not as if the commission is actively acting on those approvals, which is a bit of a nuance. So you're very lucky if you have qualified for a green channel, because you can go ahead and do your deal. It's not just half a dozen deals that are pending. My understanding is there are at least 15 that are pending at the commission since the 24th of October. Some of them are indeed, as you said, Shireen, IBC matters. You know how important those are, because we're talking of companies declaring bankruptcy. We could be talking about people's employment and employability in the future. Yeah. So, there's a lot at stake here.
There is a lot at stake, and we will wait to see what the way forward is to end this stalemate and break this logjam. Of course, today the Cabinet will take up the amendments to the Competition Act, but that's entirely different, not linked to the issue that we are discussing here this afternoon. Avantika and Sameer, many, many thanks for joining us here on the CNBC-TV18 exclusive. We will take a break, but when we return, CNBC-TV18 releases 20 stocks to watch out for in 2023. That and more when we get back. While CNBC-TV18 has compiled a list of the top 20 stocks to watch out in 2023, I must mention that these are not buy or sell recommendations. This is a carefully curated list of companies that warrant a closer look this year on account of certain triggers. Prashant is here to take us through why these companies make the list. Prashant.
Well, today we bring to you CNBC-TV18's top 20 stocks to watch in 2023. This is a list of companies which our research team has on their radar, and you should too. Each of our research analysts will present the ideas over the next few days. What am I here to do then? Well, I'm here to give you a sneak peek into the list. Well, first up, let me say that this is not a recommendation list. This is a list of companies which have meaningful triggers lined up this year. Positive or negative, but meaningful catalysts. Over the next few days, we will put out these names in detail and explain what could change and what the impact could be. Well, let's get started then. Sonia has Maruti on her watch list. Maruti, remember, has lost market share due to elevated competitive intensity, lack of new models in the UV category, and production constraints. With a slew of product launches this year, will all of this reverse? Ekta is watching Apollo Hospitals. Will the delayed Apollo Healthco's fundraise finally fructify? It's been long awaited. A fundraise in Apollo Healthco is important to ease out cash drain on the core business. From the oil and gas space, Sonal has her eye on 2 names. First is Reliance Industries, which will see the ramp up of its FMCG business, the launch of air fiber for wireless broadband, and new affordable 5G smartphones to monetize its pan-India standalone 5G network this year. The second one Sonal is watching is ONGC, where the bet is that higher oil prices bring greater confidence in the predictability of ONGC's earnings and perhaps supports a re-rating. From the tech and telecom space, Rima is watching Bharti and LTI Mindtree. Now, Vodafone Idea is the catalyst for telecom. It needs a capital infusion or it needs a massive tariff hike very quickly to keep its head above water. Either way, it's likely to be closely watched by the leader, that is Bharti, and that is what Rima is watching. On the IT services end, Rima has her eye on LTI Mindtree. From the media space, consolidation seems to be the name of the game. Vahishta is keeping her eye on PVR. upside synergies are possible as the PVR-Inox merger plays out this year. And with Sony in the driver's seat, the question is, will Z Entertainment see synergy benefits, improved governance, and sharper content creation across platforms? Will the cement space see consolidation this year? Nigel believes it could. He has two names on his radar, Orient Cement and Sagar Cement, two names he will watch out for. In the FMCG space, Mangalam is watching Colgate and whether the CEO, Prabha Narasimhan, who has been at the helm of Colgate for 6 months now, will she be able to arrest Colgate's steady market share loss and drive its diversification agenda? He also has an eye on Container Corporation, which is a privatization candidate. Now, insurance has had a tough few last years. My colleague Surbi will keep an eye on HDFC Life from the space as new regulation by IRDAI has an impact on market structure in 2023. Will HDFC Life emerge as a winner? From the infrastructure space, will NTPC emerge as a key play on India's entry into the global green hydrogen market following the government's launch of the National Hydrogen Mission? And will L&T be able to turn around loss-making businesses and benefit from the government's continued thrust on infrastructure build? Vivek has both NTPC and L&T on his radar. In the banking and financial services space, Abhishek has 5 names on his radar. Bajaj Finance had a rare down year in 2022. Will it get back to its winning ways? With the government looking to sell a near 61% stake in IDBI Bank, this is the second stock that he has on his radar. Next two are merger situations. First is the banking behemoth HDFC Bank, which is set to see the home loan giant HDFC merging into it. Then there is the merger of IDFC First Bank and its ultimate holding company, IDFC Limited. And the last one Abhishek has on his radar is Paytm. Will Paytm keep the promise of turning profitable in FY24, and will markets come to accept it and show it some love? Well, as I said, these are the 20 stocks which Team CNBC-TV18 will watch out for in 2023. Our team will present each of these ideas in detail over the next few weeks. I want to reiterate once again that this is not a recommendation list, but merely a list of companies which potentially have triggers and catalysts lined up this year.
Prashant, many thanks for joining us. That is our stock watch list. And with that, it is time for us to wrap up this edition of Business 360. Thanks very much for watching. Do stay tuned. The news will continue here on CNBC TV 18.